Hey everybody, how's it going? Actually, 30 seconds early for once. I mean, holy cow. I guess it depends on which clock you're looking at. Whether I'm early at all, maybe I'm just right on time. Hey Laura, hey Tara, hey Diana, hey Will. Good to see everybody. And we've got 30 minutes of awesome coming at you. So we've got the buyback blackouts. We've got the PCE numbers on Friday. And we'll do 30 minutes of requests as always. That's interesting. There's a little white line. Shows up right down here, but I don't see it anywhere else. It's kind of weird. Anyway, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. Because I predict stuff doesn't mean it'll ever come true. And sometimes I get lucky, sometimes I don't. All trading involves a substantial risk of loss means that if you put your money at risk, you may lose it. In this presentation, intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments out there. If you desire that personal financial advice, hire a consult financial advisor. So the buyback blackout, I kind of skirted over that this morning. This is what we're talking about right here. Actually, let me grab that and throw it on the one I can draw on. Let's throw it right here. That was the trade from this morning. That's really big. There we go. So we're right here. And by another month or so, we're going to be plummeting down there. We'll have most of the S&P 500 companies in their buyback blackouts by the end of the month. Have a few come out, and we'll dip down, really down in there, right there. Then we'll come ripping back out at the beginning of May, right here. Setting another record high. $55 billion projected each quarter. Moving forward. That's lots of billions of dollars, but can the market withstand this blackout window? I don't know. PCE coming up on Friday. We kind of expect it to just be in line, not really popping, not really dropping. Don't expect anything particularly spicy. We are kind of sitting at highs. If we roll back and look in here, last year we're at the same level. Year before, same level. Year before, we were a little spicier. Year before that, we were quite a bit lower. Year before that, in 2020, of course, that was a big weird month right there. Came at 0.2 though. I guess that was the reporting for February, which was before COVID happened. So we went down in the abyss in COVID. You know, and historically, we just kind of sit on PCE, sit at 0.2, 0.1, 0.2, 0.1, 0.2, 0.1, 0.2. Now, post-COVID, after we got through the big ramp over here, we've been at 0.1, 0.2, 0.3, 0.1, 0.2, 0.3, 0.1, 0.2, 0.3. I don't expect it to be materially different. Even if it was, I don't really expect it to make a big difference. Now, got a couple things to show you. Check this chart out right here. This chart has been ripping. And it was kind of predicted that it would be ripped, not to this extent, but that it would come up at least in here. And we've gotten some outperformance up here. This is Germany, or money flowing into Europe. All of a sudden it was a surprise. They're going to borrow $900 billion and pump it into all sorts of stuff. So we're seeing EWG ramp, but one that keeps showing up, SAP, on that list, or in that, rewind really quickly. Jump down here, click the more information button. Let's see, where is it? More about this fund. Roll down in here. Look at the stuff it holds. Finance, producer, blah, 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 blah. They aren't US stocks, so they're not linked on here. Oh, here we go. SAP, Simeons. There we go. Top 10 holdings. That's the one. So we'll go look at SAP. Top holding. Right? Let's go open a new chart. That's not exactly what I wanted to happen. So SAP. Doesn't matter. US version, Europe version. Doesn't matter for what I'm going to show you. Right here. Roll down. Look at this number right here. Now, price to sales, 8.2. Reasonable. But look at this number. 96 price to earnings. 96. I'm not a big fundamentals guy, but this is going to be very important here in a minute. Okay, we're looking at a 96. Right there. This is after SAP went on this big rip. Because EWG's been up. Look at this. Money's been flowing into this baby for a while. Big rip. Like this. Right? Now, arguably, a company that does similar stuff. Not the same. Similar. Look at this. $20. And a 5.9 on the price to sales. I think Google got a little beat down. I think the flight to Euro trade is probably peak crazy. Now, we talk about rotating into sectors. This was rotating into economies. In mass, hedge funds rotated out of the U.S. exposure. After about the third week of 2025, we saw this really kick into gear. Money flowed into Europe. Now, you really want to bet that SAP outperforms Google? Look at that. Can't roll. That's just crazy numbers right there. SAP, 96 price to earnings. Look at this one. 36 on Amazon. Apple, 35. Microsoft, arguably does similar stuff to SAP, 31. Oracle, arguably does stuff similar to SAP, 36. So comparing all those and rolling back and looking at SAP, 96. It seems like things are a little too juicy, too spicy on SAP. You can let me know what you think in the chats. I think it's we might see some reverse flow here. Back into US exposure, especially in the Mag 7. Even Nvidia here, 41. That 22 price to sales. Interesting. Way below SAP. Rocking and rolling at 96. Now, you can fake earnings. You can mess with the numbers. But you're going to tell me a forward price to earnings of 96 is a better opportunity than Google with 20? I think we're going to see money flowing back into Google and other Mag 7 stuff. I mean, maybe not, but sure does look like an opportunity to me. I don't know about you. And this one, obviously doing a little something different. But look, 25 compared to 96. big data's big data, you know. And well, how about this one? That's 511. So is opportunity here? That seems sketch. A little bit sketchy on that one, unless they can really ramp their earning. I mean, look at that. The price tag. Sales is 85. That just has danger written all over it right there. That's Palantir. Danger all over it. I don't usually talk about this stuff that much. Like, I usually don't dive in. I mean, I occasionally talk about price of sales and earnings and stuff like that, but I was kind of looking through some stuff earlier today about, you know, where the money flows are going, especially as we come into the end of Q1. Like, what's going to happen? I was actually, it's funny because I was actually looking at why are my promos not doing it? Like, good, bad, or ugly, I sell stuff, right? I sell access to alert systems and, you know, things I do, trades I make. If you're new here, that's how I make my money, all right? I make a little bit of money, ads and memberships on YouTube. I make a lot more money selling access to my premium stuff. And if you want to be a Term Market Trading Lab person and get all access to everything, we can make a deal. That's how I feed my kids and my family, really. I mean, that's the big way. Now, last 3 months, I hadn't sold nothing. I mean, January I made like $5,000. February made like $300. This month, I'm negative. More refunds than I've sold. Gonna end up owing the publisher money. That's rough. I was doing research, trying to figure out, hey, what do people like you want to watch? What are you interested in right now? What are your fears? So I was researching and looking at MarketWise. They put out webinars that talk about what promos are working, what people are thinking, you know, what might actually motivate people to buy something. And they were talking about how EWG in particular has been just rocking and rolling, and this won't have earnings or anything. They were talking about how money has been flowing out of the US and into Europe, particularly Germany, right there. And when you go look at the biggest holding in EWG, as we did a few minutes ago, I do it again. If I find the button, right there, more about the fund. We roll down, roll down, roll down. You look at the biggest holdings. You got SAP, SIE, Alliance, ALV, Deutsche Telekom, which is T-Mobile. Right there. Mercedes-Benz. But the biggest holding there, 16%, SAP. So when you compare that, I mean, when I started diving in looking, I was like, this seems a little crazy that SAP would be valued higher. And then I read another report by, I think it was Goldman Sachs. Maybe it's Morgan Stanley. Hold on. No, it's JP Morgan. I get all their trading desks confused. It was JP Morgan's trading desk that was talking about how the flight into Europe is probably done. You know, it was a great trade while it lasted, but it's probably done. Anybody chasing it at this point, chasing ghosts, that money's probably going to rotate back to the better opportunity now that the U.S. market correction is potentially done. So, just be careful out there. Careful expecting further downside. Be careful expecting a big reversal. Just be careful all the way around. I mean, that's permacautious, right? Nobody's watching out for your money more than you are. I will guarantee you. Guarantee you. Now, looking at the S&P 500, we stopped right on the roadmap line for 2 days now. And this little choppy today, we hung out right in the middle of the roadmap line. Back tested the 1 hour, held on pretty tight today. That's a positive sign for going higher. Now, this is odd because the daily is right here and the 4 hour is up here. Go look at the 4 hour. 4 hours still up here. So oddly enough, we're breaking through a higher time frame, the daily, before we break through a lower time frame on the 4 hour. That's just that's an odd setup that we would get through the daily right in here before we get into the 4 hour right up here. That means there's a significant resistance to going higher built up right in here. We're going to get above that 618 level. 58.88. Which is sitting just on top of the 4 hour, which is just on top of the daily, which we're just right in the middle of right here. Top of it's right in here. It's got some stuff to work through. That's the bottom line here. If you don't watch my morning show, you don't come hang out with me in the mornings, you don't catch it on later on in the day. I mean, you can play it any time of the day. And once I'm done being live, you can watch. I mean, as soon as I've said it, you can watch it on replay. That's the way YouTube works. So that's one reason I love it. And 4 hour ES showing a little sparkiness after the market closed. Getting a little rally. We might get a nice fat pop in the post hour here. Post hours. The daily, we're trying to push up through the top. The 618 on ES still sitting up here at 5,900. There's a slight variance between S&P 500 futures and the S&P 500 cash index. I tend to look at the futures because they're only closed from 5 o'clock right now till 6 p.m. Eastern. They reopen and start trading again. They trade all night. If this thing ramps on up and we somehow get up here tomorrow, probably set for the rally. Now, I postulated Friday, I think it was at this point. Maybe it was yesterday. I don't know. My days are all running together. That this thing may do a V bottom. I guess it was yesterday morning. Yesterday morning I said this, I think. And took us about 22 trading days to get down here. 22 trading days to get back up here. Would put us back up to the top somewhere around April 7th, April 8th. Now, if you look at the way we V-bottomed in August, we got up just above the 786 here and hung out for like a week. Made a little dip before we could actually break out. Maybe that's 2 weeks. If we do that again, since this is a bigger down, we could hang out here, make a little dip, somewhere in a sell in May, go away, and then start to rip into the summer, go on up, make those higher highs, possibly all the way up to 6,600 into the fall. So this is kind of the path right here. Dip here, rally, break on higher, maybe top out, and then somewhere in the fall, start rolling. So, SAP currently does some AI agents, but that has not historically been their business. They've been around for a long, long time. They just make software. AI agents are the rage right now, but SAP makes all sorts of stuff. Been around for a long, long time. They engage in the provision of enterprise application software. None of that says AI agents. So, don't mean to tear you down, but the provision of enterprise software. It's a lot like what everybody else does. This right here, told you we'd have to grind through it. Gotta grind through it. I did. I mean, hey, you wanna call me out? I was on the page before I started this. Look right here. What do? Rise to get powerful? Yeah, sure. I didn't load it on this computer. I loaded it on the other one. AI, AI products. But look over here, business AI, data cloud. That sounds a lot like Google. ERP. It sounds a lot like Google. Sounds a lot like Amazon, data cloud, ERP. Technology platform. Sounds a lot like Google, Amazon, Apple. They've all got that stuff. Financial management. Sounds a lot like Oracle. Spend management, Oracle. Supply chain management, Oracle. Human capital management, Oracle. A lot the same. There you go. Sergio says he used SAP when he worked for Procter & Gamble. Was there any AI agent there? No, probably not. So, business management software, which is what Oracle does and lots of other people do. So, I'm on their website, dude. Business management, that's what they do. AI is just a little blip. So, little blip. They work in all sorts of stuff. And arguably the AI people right now, PLTR, but obviously SAP is way bigger sales-wise. It's German. That's just German right there. Business Suites, right there. It's got SAP Cloud ERP. Business AI is just a plugin. I mean, CRM, you can say Salesforce does the same thing as all this. I mean, they're not exactly one-for-one replacements. They all got their things. Databricks, I've heard that one a lot for a number of years. Everybody's shoehorning AI and all this stuff. I wouldn't bet on this being the end-all be-all. Anyway, back to it. Yeah. Inventory, production, pricing. I mean, they're just, business management, right? I mean, that's how you summarize it. You can shoehorn AI into that stuff, but just gives you insights. And it's kind of what PLTR is doing. Oops, apparently I hit print somehow, some way. Shoehorn PLTR. I mean, you go look at their website. Palantir. It's all the same kind of voodoo, right? AI-powered automation for every decision in business management. Same kind of stuff. Believe it or not, you can hire Amazon to do the same sort of stuff. You can hire, I mean, it's like the list goes on. Everybody's got their way to do it. So we already see the price to earnings, PLTR, rocking higher, SAP, just to circle back for those of you coming in late, 96. And then you got like Oracle, does similar stuff, 36. Got CRM, does similar stuff, 44. Just depends. Yeah, keep your money in the US. Just depends. Depends on what you want to get into. Salesforce, you can say, well, they're point of sale, blah, blah, blah. At this point, it's business management. We can go look at their website too. Start reading it. You look at products. Look, AI, you can say, yeah, Salesforce is AI agents. I mean, everybody's putting it at the top, but that's not what people pay Salesforce a crap ton of money for. It's the CRM management software and business management software. Slack and all sorts of other stuff. So they all do very similar things. Yeah, I mean, like, there's Goose piping in. SAP, Six Sigma, ERP. I mean, it's all business management stuff. Even IBM is actually in this game. And HPE. You go read the website. I mean, you think of like IBM sells computers, but look, there you go. Get your AI agents. It's all the same crap, just different. IBM Cloud, blah, blah, blah. They help build what you want. They've been running Watson for years. Make business decisions. They just go, where their expertise and where they came from. They all compete for the same sort of customers, doing the same sort of stuff. High level, it's kind of the same stuff. Just depends on what your particular application needs to which one's the best fit. How much money you want to give them. All right, moving on. Russell, significantly below the roadmap line at this point. That'll be a resistance. Then the 618 up here. This one may hit that, pull back while we get that other consolidation. Then go ripping up here. Hit this while S&P and Nasdaq top out, and then roll down. There you go. Oil. It was looking like it was going to be a green day, but so if this is the fake break back above the uptrend of lows, watch out. Nothing's clear yet. The next level of resistance is a daily roadmap line. If we can get above that, 80 would be the target. 90 above that, then 105. So it goes 80, 90, and 105. Those are the upside targets. It all starts with a move above that 72 level. If we roll back down, start breaking down below this kind of loose uptrend of lows here, this consolidation was kind of consolidating in a trend here. We get below the bottom of that trend, somewhere around 67 at this point. We're probably going on down to the low 60s. 64, 63, 62, 61, 60, somewhere right here. That's what that looks like on oil. As far as West Texas Intermediate, now a little bit different chart potential on Brent. Brent here, which is European oil, looks like it's going to rally right up to 75 in the next few days. Maybe get a bounce down before it can break through. It's possible. We pull back right now. Let CL make its lower low. Somewhere in the 64 area, maybe not super low. And then everything goes up. That's possible. Gasoline, look at this. Not letting up. If and when we break back above the 226 area on a daily close, maybe as high as 227 there. Probably going to set up the move on up to 242, 245. That would be the expectation there. Heating oil, which is diesel fuel, lagging behind, looks a little bit more similar to oil, but look at that big, sharp, fat candle there compared to oil's candle today. Probably expect this to come on up, test the roadmap line, and then we also have the 618 resistance level from this high down to this low, and 240. Get above that 240 area right there. Maybe 243. Probably setting that up. Remember, there's zones. They're not hard, definitive lines at 240. It's a kind of a zone in there. We'll have to break through it. We could push on up and even as high as 248 and still reject back down because of these candles over here. Still provides some resistance right in there. It'll be an interesting, bottom line, we're probably going higher from 224 up to the 240 area on diesel fuel. Natural gas continues to be soft. Seasonality-wise, this is probably going to come down to at least 340. If not, break on through, take a bigger dip into the 260 to 280, 290 area if we get through that 340 area with any kind of enthusiasm to the downside. Could it go on lower? Sure, it could come all the way down to about 215 without being too awful crazy. And that's likely to bottom sometime April to May. Sometime this April, May area is when I would expect that to hit right there. It's just seasonality on natural gas. And if you've never seen the seasonality on natural gas, it's very obvious in the forward-looking charts that go out for the next, 12 years, more than a decade. And we usually ramp it. That ramp usually peaks out in December, and then we quickly dip it off. That dip usually happens into the late April expiration there. These, if you've never looked at futures contracts before, they're contracts similar to options, but totally different way that they work. But you can see the pricing for all these different futures contracts. They price a spike in December and a drop into April every year. Then it goes on another cycle, another cycle every year. So what do you expect as we go into April? A pullback. Looking at the actual pricing we have, probably 275 would be a good spot if we get below 340. Moving on. Gold. Consolidating in here, I made the case. I use this as an example quite a bit this morning. If you missed that, I highly recommend you go look. But basically, we have an upside around 3080 to 3100. 20 point range. Right up in here. That would be the target if we get the next extension higher. I expect that to pop. It'd be about like 60 to 75 points higher than where we are at the close today, roughly. Silver had a strong up day. That did a much bigger pullback than gold did right there. This is very choppy and overlapping when you look at the highs and lows here. Does call into question. This does not look nearly as bullish as gold. If that, like 1, 2, 3, 4, 5, 1, 2, might get another like down on silver. That chart's a very messy chart right now. And we're still sitting at a lower high. We have not broken higher high yet. This could be the first move down, the retrace, and we could get the second wave down. Or the A, the B, and the C. Not clear on silver. I do expect this to be one of the bigger opportunities for possibly this year into next year, maybe the year after. If it catches up with gold on the breakout. Breakout being all the way up here at 50. Could be a large upside, 60, maybe even 75 if it catches up with gold. If you've not looked at the big picture weekly chart on gold and silver, check it out. There's silver. We compare GC1 exclamation point. Compare where we're at on gold. And when you look back here and line up the prior high, right in there, gold is way outperforming. Gold way outperforming by 100%, while silver is negative 28%. So it's not even back up to that high back there. And we still have the upside performance to go if they're going to catch up. Doesn't have to, of course. Just throwing it out there. Potential possibility that we catch up on silver. Silver will tend to catch up toward the end of the rally in precious metals. That's what we saw back here. Silver actually outperformed. Right there. You see that they were neck and neck on that pop, pulled back. Gold outperformed on the pullback. I mean, silver outperformed on the pullback and then outperformed on the next ramp, while gold just in the middle. But now gold's outperforming and silver's underperforming. But silver outperformed on the pullback, so it has the opportunity to outperform on the ramp this time also. You notice from all the way back lining up in 2008 time frame. Cool. It's stuck. Yeah. Percent basis. There we go. Come on. Oh, I hate the way this does it. On a percent basis, there's a huge upside potential on silver. If we were to rally on up to the, say, 1618, right up there. Look at those numbers. 300% upside. Wild. Wild potential. Copper. Gold. Gold, go away. Copper closed at an all-time high, $5.20 a pound. $5.20 a pound right there. Boom. Pretty much negated the drop at this point. That's pretty much not what we're going to do. This has to be bullish at this point. One way or another, this has got to be some sort of bullish move. So move up, retrace, trace. Probably looking for resistance at 553, possibly even 646. Lots of people like to trade this with FCX, but that's severely lagging at this point. Has opportunity to break out, head up to 58, 60, 68. And then SCC, trying to remember what it is. There it is, SCCO. This one also has upside opportunity. 134, 140, right up here. Breakout and rock and roll. Not sure why. My roadmap line's sitting all the way up there. Looked like the minor adjustment factor. So there's the resistance right there where these prior highs were. Break above. Be looking for upside. So there's two opportunities in precious metals right there. All right, so let's take a quick look at some crypto. Didn't really move much today. Just kind of sitting at this roadmap line. I drew a whole bunch of arrows to try to get to move. Hadn't worked super great so far. So very enthusiastic trying to get it to move, right? I mentioned that this would be a tough area to get through, and there was the first attempt. Here is now the downtrend highs and the roadmap line all together. If and when we get through, this may be an explosive upside move. I wouldn't be shorting Bitcoin right now. I'm not adding anything to it until we actually confirm a breakout. Even then, I may not add anything to it. I'm pretty full boat. Pretty much when we got right here, I pretty much loaded up the last bit I could afford to do right now. Like I said, this year's been a little rough on me so far, sales-wise. Breakouts would take it higher. Not too shabby. Ether has a lot of work to do. We've got to get through the downtrend highs and the roadmap line and this big consolidation back here. So it's like, there's that. There's the roadmap line. There's the downtrend highs. There's the giant fat resistance level right there. Big black hole of resistance. We've got to get through it to go higher, obviously. It sits in between us and higher prices. If this thing is done correcting, if this was just one big giant pullback on the way to higher prices, upside target could be somewhere up in the $5,000 to $7,000, $5,000 to $7,000 area. 5 to 7,000. Hasn't been higher yet though. This is the thing that concerns me. We made the low back in June 22. Bitcoin didn't bottom until November 22. So this is running ahead. Bitcoin made a higher high already up here, but this one severely lagging behind, showing no enthusiasm for doing anything. Concerns me. If we break down below 1,500, it's kind of like the last line in the sand I have. Probably going down to triple digits lower than this low we made in June of 22. Be careful. That's my big cautionary on Ethereum. This chart setup can easily turn vicious to the downside. I probably won't take many requests for crypto. I do a pretty in-depth analysis every Sunday. That analysis is still valid. If you're going to request a whole bunch of cryptos, I direct you to that. If you're like, hey, I don't want to pay for it, tough nuggets. I put a lot of work into it and got a lot of refunds on it. So I guess people think they just come take all that for free. I'll do what I can, but I'm not going to go through every crypto, especially the more obscure. If we stay on the top, I'll stay on the top, say, 25. Outside of that, anyway. All right, so it's that time of the day where we do requests for at least 30 minutes. Type in a full ticker, capital letters. Let me know what you want to look at. And if you got a question to go along with it, please use complete sentences. If I skip you, channel members have priority. So if you're a channel member and your name is in green on the, oh, it's green for me. I don't know what color it is for you. If your name is in green, got a little star next to you, you have priority. I'll circle back around and pick up everybody else after I pick up all the channel members. And there we go. So I see ZN1 exclamation points. And we're back to the roadmap line. If we can find support here, potential to rally on up. If we bust through, that's probably the first sign we're coming back to the bottom, or at least substantial retrace back around the 618 level. There. I don't know. Nothing's really, from when we kind of did this initial drop here, we stopped pretty firmly at the 618. Retesting into the roadmap line. If that gets below, we'll probably come down and test this 618 right here. Somewhere around 109. 109 even. I thought that was a 7, but it's not. It's a 109 even. It's just the hash mark. That's what it looks like. I'm not good at trading interest rates and notes, so can't really tell you much about those. I can predict where we're going, but I don't know how that relates to dollars and cents as far as what you make when you buy a contract. That's a whole different realm where I haven't really delved into. PENG. Sideways. Nothing changed. Still sideways. There's the upper resistance at 30, lower support at 12. I expect sideways. MU. Upper resistance here at 113. Lower support down here at 77, 78. As long as we're in between, probably going sideways. Nothing changed. This has been the same for almost, we're getting close to a year now. We kind of dropped into this zone back in July. And July, not that far away. A few more months. April, May, June, July. 4 months. So we've been here for like 8 months. Just messing around. If we can break out, great. I mean, awesome earnings. It looked like we were going to get some airspeed, and then Nothing. Nothing at all. Couldn't go anywhere. So, I don't know. They're going to keep going. Like a stock at rest stays at rest. Just like a object in motion stays in motion. Object at rest stays at rest until an external force is acted upon it. Carvana, resistance right here at the 618, 242. We break through it. We do have the gap down resistance right up at the high. Could meet that brick wall. They bust through the brick wall. 310 would be the first target. 326, next upside target above that. If it rejects, well, my target's down here, like all the way down here. I expected. This looks kind of like the bubble pattern. Did it over here, epic crash. Doing it over here. This is very classic. Remember, we have examples of this. See this? Big pop, drop, big pop, drop, big drop, drop, big drop, drop, big drop. Every time we're grinding lower highs. And this one today announcing they're going to take their $5 billion of cash, roughly $5 billion of cash, and buy Bitcoin. We'll see how that works out for them. Up, what, $1.50 in the post market? Just because you buy Bitcoin with your cash doesn't mean it's a great deal. Just saying. All right, moving on. PCAR. Ooh, broke out the bottom. Not good. Not sure I had enough bounces to consider it a watermelon seed squeeze. I usually like to see at least 5. That's only 1, 2, 1, 2, 3. Well, 1, 2, 3, 4. I guess it may be. What's it? 1, 2, 3, 4. And broke out. Not very clean, if that's in fact what we're going to do. But the target may be, unless this is a fake out, then we break right back in. Target may be down here at 72 area right there. See what happens on that one. Roblox. Hope you weren't bullish. Sorry if you were. RBLX. Potential bounce. Resistance right there at 67. Looking for 78 if we can get above it. Got to get above that consolidation right there. And upside. That's the high probability move. If you buy now, good luck. I'd stop out on a breakdown below. I'd actually give it till all the way down to here. If you were going to get in it now, because you might dip. I mean, if you don't want to ride it all the way down there, get out and then get back in as soon as it comes back up through. But it could be just a spike down and reverse. It's hard to. That's why those decisions are so hard. Right there, got a downtrend of highs. We're kind of grinding it. Could be. I mean, you could take an aggressive entry right there on a breakthrough. I'd probably wait till we get up here. And we do have that giant gap down where we were at the high and then got slammed on earnings. Inium. Haven't really paid attention to this one much lately because mostly got off of it. Does have a potential 1, 2, 1, 2. Potential 1, 2, 1, 2. And a 1, 2, 3, 4. If we get a 5 and then do another 618 retrace, that'd be another 1, 2. It's like a circle. This would be like a Roman numeral. Different. They're different. What do you call it? Degrees in Elliott wave speak. Different degrees of waves, and this would be like a little sub 1, 2, 3, 4, 5. So this could lead to a powerful wave 3 if this is what's going on, or when you zoom out and look at it a little bigger, maybe this is just an A, a B, and we get a C wave that comes up and stalls right here at the 64 area. Then we go back down to the bottom. Not sure I would count on much higher than this area right here. That would be super optimistic. I don't think we're going out higher highs. The way this kind of works right here, this looks like very volatilely. We may stop at the 63 area and go cruising back lower low than 30. Moving on. I did change my mind because this pullback right here is more like this. This starts to make me think this is a W. This is an X. And we're working on a Y. This would be a Y wave. There. And this would be an A. A complex B. And then we go lower low. Down here for a C. Sorry if I got you overhyped on NEM, sucked in, but do I prefer NEM or MU or AVGO? I don't prefer either one. I have MUU and I have some AVGO. This one's just stuck. It was moving, but now it's stuck right on the roadmap line, not really moving. There's the resistance right there. Support is at this level, coming across here where we made all these highs. 1, 2, 3, 4. And then back tested right there. Pretty solid breakout level. Pretty solid flip point support level at this point. If price rolls back down, we're probably not, I mean, we're probably going on down pretty viciously. Like down here on AVGO. Whereas MU is stuck. It's been stuck. I mean, that's the upside resistance. We got to break through. This is the downside support. This is already the measured bounce. It has the bigger upside potential, but it has to break out through the resistance to get there. And then we have the 618 where it gapped down right there. So it's like 2 levels of resistance to go higher. But the bigger upside, I mean, it has a giant upside potential. Like 4x. If we came up here. And that's why I hold MUU. But this one hasn't broken out yet. Still working through the downtrend highs here. Set your alarm up here on the trend line. It's easy enough. Draw your trend line. Click on it. Click the alarm. Click when you cross it. Tell it, say, hey, dummy, buy MUU. When we cross the trend line, you'll be like, oh, supposed to buy MUU. And then potentially watch it go higher. Yeah, AVGO has AVGX. If you could kind of do the same thing here, draw a trend line. When we break above that, be like, oh, we're going higher. But if we broke down here, you see this is already, because of the leverage, this is already below those highs. This can quickly accelerate lower right there. PLTR, already was talking about that one. But price-wise, has resistance at 106 right there. And potential to bounce down like so. We get through that and gap down from right there. We get through that. Upside 132 for now. Possibly get some extensions 139, 150. Remember, fundamentally, this is when fundamentals matter. Like JT usually doesn't give 2 squats about fundamentals. But when fundamentals look like this, that is like red alert. You know, bing, 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 bing. Red alert flashing. Those are dangerous numbers right there. Anything with price to sales over 20 is a dangerous, dangerous, dangerous stock. And when you're at 85, that's really dangerous. I don't care how fast they're growing revenue. That's a dangerous number right there. Think about it. Just cutting it back down to 20 is cutting this stock. It's 75% of the value gone off this stock. Think about that for a minute. What would 75% off the stock do to you if you were long right now? Talking about back to 24. That could hurt. Be careful. GES has the potential to bounce. Not doing it yet. I bought a long-term position. I'm not even going to look at this for a while. The line in the sand is down here at 6. If that's not your game, get out. Don't play. This is long-term potential. We're still bearish below the daily roadmap line. Get above that. Has large upside potential. When I say large upside potential, I'm talking about potential. I'm going from 11 to going to 125. That might take years. All right, this could be the next Abercrombie & Fitch thing right here. It just starts ripping. Of course, it could all blow up like Challenger, explosion. But we could be looking at like 1,200% upside. That's 12x on your investment. Should you FOMO in? Absolutely not. Can this cut your money in half by dropping below 6? Absolutely possible. And we're still downward bias. The odds are we're doing this, but there's a chance we do that. So I put risk on. For those of you that wonder why I would buy some GES, only bought a small position. It's for the potential to make 12x versus losing half my money. Don't take the risk. You'll never make the big move. Meta. I still believe any big pullback like we got is a buying opportunity long term. Probably going to bust on up to $1,000 area. You look at the big picture pullback we did back here. Sets it ripe for like 952, maybe even 2,500. We came up pretty violently off the lows, hit the 1448. Consolidated, popped the 1272. Parked there for a little bit, made an attempt at running to the 1618. Came back to retest the 1618 and the roadmap line. It's probably going to push us up to that 1618, 952, maybe even get to 1,000. We may sit here, may make an attempt at going higher, retrace before we can go higher still, if that's what we're going to do. Looks what's likely, but all that notwithstanding, if we top out in the market right here, this could go on a big downtrend. That's always possible after hitting that 1618. So watch the 952, 1000 area, unless we just go ripping through. All right, be careful. Careful out there. It's your money. ARIS. Dun, 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 dun. Dun, dun, dun. So this one did a large pullback, but that doesn't really matter since that was the lowest low. These targets mean nothing, unfortunately. Only thing we can look at that means anything is this. We're hitting the 272. I would watch out for, hadn't even really pulled back, but we might pull back. Like, I don't really have much upside to go here. We'll probably come back and retest the breakouts at some point over here before we make the next big move. Now, these things moving in 5 waves. If we did that pullback to retest the breakout, the next move may, if we did this like this, that next move may take it right in here. There's the futures market back open. Man, only 50 people here. I usually cut this off when we drop below 60. What a bummer. It's people like you. You gotta tell your friends. You gotta tell other people. Hype it up for me. I only have so much reach. The biggest way I grow is by you finding value and telling other people. If you don't tell other people, people don't show up. People don't watch. I can't afford to keep doing this. I hate to be like that, but CRDO, resistance at the roadmap line, break up through, resistance at 64, we get up through there, somewhere around 94, 97. That would be the upside there. Nothing changed on the chart, still the same, been the same for a couple weeks. And AXP. Coming back up, resistance at this consolidation right here at the 96, all right, 296.43 area. Possibly up to that top of that consolidation at 315. Get above that. 337 is the target up there. Possibly 348. It's AXP. MasterCard, same vein, has a similar pattern in place. Did the high, did the low. Closer potential to break through the 618 zone right there. That 560 area. Get through it. 592 on the upside for MasterCard. And Amazon. Coming back up nicely. Sitting at the daily roadmap line. Get above it. Looking for the 221 resistance. If we can get above that with a daily close, sets the odds we're going higher. New highs around 250, possibly even up to 258, 260, right there. Oh, Amazon. And Credo. I just did that one. The chat jumped on me. All right. GS potential to find resistance at 611. Now, we usually see money rotate into financials at the beginning of a quarter. That's what we're seeing on Goldman Sachs, JP Morgan, Bank of America, Morgan Stanley, Wells Fargo, all those very similar pattern. If you wanted to play them all, FAS is a way to do it with the leverage without buying options. Click on more about the fund. You can see the exposure down here. You've got Berkshire Hathaway, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, Goldman Sachs, Progressive, SPGI, right there. And this is leveraged on a 3x fashion for financial sector. So as we see money flowing into the financials, this thing can rock and roll 198. Now, I do caution. Oh, cool. I somehow X'd off Apollo. Brilliant.org. Cool. I didn't even favorite my own indicator. That was brilliant. There it is. All right. You can see right here, not the most awesome win rate. Profit factor is negative, so when it loses, it eats up the wins. Be careful. Permacautious. All right, moving on. Coin. Yeah. Stuck in the abyss. Until we break above the roadmap line, I'm not very bullish on coin. It's opportunity that this is a buy. You stop out below 172 because if we get below 172, odds are we're going lower low than we were back here last fall. So 172 is kind of line in the sand. If we get below that, probably going down to 129. If we break through the roadmap line, we do have the 618 resistance at 271. And these highs from just in February. I mean, look how far we dropped. Highs in February right around 300. Get above that. Looks like pretty fair odds. We're going up to 387 to 400 area, maybe even up to the ideal target around 500. There's the slim chance that we get new super crazy big highs up around 900. Be a very slim chance. Low probability. But if things get crazy, that's where I would expect Coinbase to go. Now, a way to play that one is our old buddy Connell right here, which has done a bigger picture correction. Leverage coin. That move right there. Potential upside somewhere around 107, 108 right in here. But we got the roadmap line, 618, all that stuff in the way to get to the promised land at 100. Could be bigger upside. I mean, this is 20 to 100, so that's a 5x. And you look at coin itself, you're at 200, and you're potentially just going to go up to 400. So that's a double here. Maybe a little better. It fits. If it fits, it ships. So you're looking at a 2.5x on coin or a potential 5x on Connell. Take your pick. And I would play with shares. You can play with options at your own risk. Visa, kind of already talked about that. Well, I did, but I didn't. It has downside potential. Probably needs to retrace. Visa, the reason I picked the MasterCard first is it already bounced. Visa, on the other hand, has risk to come all the way down. Could it just extend from here? It could. But it looks like we're going to meet some resistance and take the next leg down. DFS. Already bouncing. I wonder if they're ever going to merge with Capital One. And speaking of Capital One, COF. So Visa is the laggard. Either it underperformed on the decline or it's just late to the party on the decline. I would be careful. Everything that bottom looks good for going higher. But Visa is the one that didn't do the retrace to the roadmap line. That would make me suspicious that we might get one more leg on Visa. It's just the way it works. And Tesla coming back up. Daily roadmap line resistance. We get above 310. Things get spicy. This is what I kind of speculated that we might do. If you missed it this morning, go watch it. But that's kind of the upside potential right there. Now, downside potential. Break down through the support, and we're going lower low than this low back here. That's how important that block is right there. If we get below it, probably going lower low. Back in the less than 100. Right there. Right there. ACHR. Archer. Look at that. Did the bounce. I'm very suspicious of VOTLs. Don't think that's a viable business in the United States anyway. Watch for the bounce off the roadmap or bounce off the 618 level right there around 10 and the decline further. I mean, we can debate it all day whether you're, EVTOL, vertical takeoff and landing vehicles are gonna be anything, especially electric ones, EVTOL. But in the current environment, I just don't see it all work. So, all right, that concludes the bottom of the list. And we'll go back to the top and we'll hit the channel members. I mean, yeah, just channel subscribers. Excuse me. So, AMBR. I got nothing there. Not enough candles to do anything with. AMGN. AMZN is a biotech. Be very careful. We seem to be failing the breakouts. Got back below. It's downtrend of highs. That is danger for coming all the way back down to the lows we had in December. Right there. Big red flag. And Kimberly, if you're on here, Chris just called me for some reason. I guess about the meeting. Yeah, QMTS doesn't work. Sorry, Colleen. TTE. Possible this is done on the downside. Maybe. I was going to be really concerned if we get below 50 that there is further downside to go to new lows at 30. If this holds here, it's not the best measured bounce, but potential for this target up here. On the trade desk. PALO, palladium. I like looking at the palladium futures better. It's just not doing anything. Like this is lower highs, like trend of lower highs, trend of higher lows. Probably just gonna sit in this $1,000 area, just in this zone. That would be kind of what I expect. So we've got like this going like this. Got kind of this going like this. And I kind of expect this just to mess around. Maybe through the summer, just right there. Definitely not responding. When you look at copper taking off, this is not responding at all. I think I'm at platinum's not really moving either. I kind of expected that to break down back before, but just not doing it. So it looks like we may take that on sideways too. Till we break out or break down, but at this point, there's no definitive anything going on platinum or palladium, either one. So PAL, can't really, I just expect it to just sit or kind of like right about where it is in between, say 95 and 84. It's kind of in this zone right here. BLBD. Bluebird. Not familiar with their current. I mean, I know they make buses. I don't know if they were trying to get into the electric bus business. This little diversion out right here. I'd be watching if we break that back below this level right here where we made all these highs. Take it back to the bottom. Don't necessarily think this is a very bullish, you know, if we hold the, if we back test that break out right there, turn back higher, get back up through 40s after doing that, could lead to more upside, possibly 100. We bounce off of that though, probably still on the same path to go lower. Looks like a really rough chart right there. Did not break with a lot of enthusiasm. So this is these prior highs are very important coming across there. If we don't maintain that on a retrace here, we don't maintain that stuff, not looking good for continued bullishness. Kind of high level hit Morgan Stanley. That high, that low. Break back above the 618 level at 128. Leave our 147. Simple as that. NEM already hit. Kava. Maybe that was the bottom. The daily roadmap line is very important. That came up shy of what I expected, which was right down here. Retest that level from all the way back here. And it just happened to be the 618 of the low here in 23 with the high here in 24. That would have been the 618 retrace. We came up shy of even the 50%. But that still could set up the upside potential to come all the way up in here in the $500 to $1,000 area. We're going to have to break up through the downtrend of highs, the roadmap, the daily roadmap line. So there's major resistance right where that orange zone is. Get above it, probably setting up the bigger upside for Kava. If we glance off of it, the downside support is still down there right around the $50 to $60 area. So that's important. If you're trying to catch the bigger upside, you can buy now and buy more. If we drop, if you're confident on the bigger upside, it would, if we did the bigger drop, it will pull the upside down just a hair, but it's still a similar area, 550 to 600 or so. All right, Baba. Yeah. As far as the minute goes, we're just consolidating between the 1272 and the 1618. I still expect it to pop on up to the bigger 618 level, 160 to say 200. Expect a bigger pop up in this area. Maybe another consolidation back to the daily roadmap line. That'll probably be up in the 130 area, right where we're consolidating. And maybe why we're consolidating here is that we're going to come back and test this when the daily roadmap line is up here at some point in the future before we can go even higher. Although if we break down below that, it could be set up for a bigger down. So that's the high at 320 all the way back there in 2020, and the low down here in October 22. Made an initial move up, a retrace. This is the next move up. If we could break through that 166 area, we can get continuation higher, possibly take it up to 410 eventually. Look for that pop, that retrace, and then that pop there. Like that. FIHL. That's a bad chart. I don't like it. Do not like it much at all. Mainly because of the overlap here. This looks like it was a 3-wave move up. 1, 2, 3. Be difficult to call that a 5 at this point. That kind of truncated, didn't really extend, shows lack of enthusiasm for going higher. We came down, overlapped that initial price action, even though nothing over here really matters too much before the lowest low. I don't like to see that kind of lower low right there. Not giving me high confidence on going higher from here. Now, the only bright spot I see is a potential, very loose potential 5 up. Not really a clean 3 down. Sitting at support at the 618. So measured bounce is the only thing you can really bank on here. And I wouldn't give it a high probability with a limited history. That would put the potential up here in the 26 to 30 area. If we're going to break out. Probably something like that. Possibly up to 37. But I don't see like giant upside. And insurance is not exactly one of those like rocking and rolling, fast moving type of industries. And Their net margins went negative. They're losing money. It looks pretty bad. Would not surprise me to see this roll back down to a lower low in the $10 area. Yeah, be careful on that one. TGT, oh, look at that. Lower low. I'll be dang. None of that matters. Let's see what we got. It's probably going lower at this point. That was 5 down. Target looked to be good for going higher, but that's now with that lower low in place. That's a 5 down. Clear is, I mean, this is pretty good for any Termite Trading Lab members. If you don't see the 5 down right here, this is very clear to me. 1, move down. 2, retrace. 3 is right there. 4 is right there. 5 is right there. That retraced to a 618. And then we're starting another one. Golly. Target might go out of business. Yeah, it hadn't been able to turn it around here. So I would expect something down here, if not even worse than that. We could see it back at, if that doesn't hold, we could see it back down here. Well, I'm just full of rosy news on Target today. Yeah, Target on Target down. ADSK finally done. That might be the bottom. Hit the target pretty well. Pull this down here. Pull that. Got resistance right here. Get through that. 389, 350 upside targets. There you go. That's ADSK for you. AMZN. I think I already looked at this. I don't like the fact we broke back below, which can lead to returning to lows down here. App. And somebody moved a large chunk of puts today. Like 1.1 million puts just out of the money. It looked like they sold those puts at, hold on. I created a new tool in Discord. I just got to go look, take a look, see. Goldman Sachs, FCX dash, let's see, FCX. Dash, now that was a trade. I missed that one. It was puts though. Meta, UAL. App, yeah. So somebody bought 330 strike, or transacted 330 strike puts right there, just out of the money. Let's look at the option chain. They did that on April 25th. April 25th. 330 options right here on the puts. 330. Those suckers right there. It's interesting they give us all these Greeks, but they don't give you volume or open interest, which are by far more important to me than the Greeks. So at 3:30 strike, there were 7 open interest. There were 7 contracts open. Somebody transacted 500, which I believe they sold. I think they sold $1.1 million worth of 330 puts. This is a pretty bullish looking chart. I think this has large upside potential. If we get through that 618, taking this on back higher, 558 or 588, excuse me. Look at their financials. It's in the danger zone on P price to sales, P to S. AAPL. I don't even know. Let's see. Not even sure what they do. Development of operation of a mobile market platform. That sounds very descriptive. Connect with your customers. App 11. Say, help you make apps, I guess. Or is this like CRM for your apps? Gaming meters. Yeah. AI-powered recommendation engine. Acquire your ideal users. Monetize your app. And tools for helping, I guess, push out apps. So potential for that to go back higher, but also watch out right here. If we were to turn down, a bigger downside could take place. That bigger downside at this point, this high, this low, this high, would be somewhere down here. If we turn down here, we reject that level. Otherwise, if we pop above, here's the upside. Bigger downside risk. So maybe the put buyer knows something, but at only playing out as far as they did to the 25th of April, doesn't get very long. I would bet on this being upside between there before we roll down. All right, back to the chat. CMG already hit. Chewy. I'm on the wrong, typing in the wrong place. CHW Chewy. Did the roadmap retrace and holding. If we can break back above the 3660 area. 30, well, 30, let's call it 37. Looks like we have limited upside here. Wasn't a very big, what do you call it, permutation. That very, very similar in size to that one. So we could get an outperformance on the upside. Could actually outperform slightly. So I have this theory of echoes. Started echo trades as my first product. We get echoes in the market similar to that right there. That would be an echo from here to here. And we tend to get the same sort of outcome out of the echo when we do echoes in the market, which, funny enough, puts it right up to the 1618. So 48 upside potential if we can get past the 3660, 3670, 37 resistance there. 48 on the upside. That's a pretty fair upside potential, really. Look at that. 37, go up to 27% on some shares. Not bad. Not bad at all. NATL. And we actually got more people watching. Awesome. Thanks for tuning in, everybody. And sideways. Is that National Cash Register? NCR. Computer programming services. Nope. Not the National Cash Register. All right, that's just a sideways chart. Not really showing much anything. While we're under the roadmap line, that's downward pressure and may lead to further decline. Overlap doesn't give me high confidence we're going higher from here. Be careful chasing that one. CRWO, crawl, crowd strike 2x. Just say CRWD if you want to know. CRWD. Like, all you do is take the targets here, grab the box. Leverage charts don't really mean anything. They don't follow the patterns. That's why I have a thing that's like leverage, right? So when you're looking at CRWL, potential 25% upside here. So CRWO, we're looking at a 50% potential upside here. It'd be something like just back to the all-time high. There you go. That's how it works. TEM, they don't stand alone. Like, there's no way that the leverage chart is going to greatly vary from the underlying chart that it is leveraged upon. And TEM, look at that last. Now, this is not what I would consider an uber bullish move off the initial retrace there. Pull back, extension, hit the 1448, and retrace to the roadmap line that we didn't previously have because we didn't have enough candles. Held it right in here. At this point, it was a slightly smaller. It's not quite an echo. Slightly smaller. We don't really have a lot of pullbacks to compare against. Get above this. Odds are we're going to get another extension based on the fact that it's only been a slightly higher high, a slightly higher high. It's probably still just a slightly higher high. You can see the length of time that these usually take. This may mess around until we're out here somewhere in June or July. Possibly May, June, July, somewhere in there. Before we get up to that zone. On TEM. I mean, it's just an educated wild guess. I could be completely wrong. HIMS, man, that got close. Really got close to that target. Golly. Not fond of the truncation. It has truncated quite a bit, though. Like, it didn't hit here, didn't hit here, didn't hit here, didn't hit here, and didn't hit here. That does not negate the potential for going higher to this area right up here. They supposedly got shut down on selling GLP-1 drugs. I don't know. There's the resistance. There's the upside. On HIMS. AGX. AGX. That high, that low. Resistance. Right there. 150 to 160. Upside 208, 225. Right there. And GRBK. Yeah, retested the. I'm not fond of the overlap on the retest, but I like the fact it popped right back up. Consolidating there. Went a little deeper than I would want to see, but holding them right there is good. If we dip back below, this is the big red warning. If we get back below that low, right there, probably going on down. As long as we can stay up here, break through the roadmap line, break through that 618, that consolidation at 71, 72, sets up the upside 90 to 95. If we reject off of that, break down below, again, that low, super important. That low is super important. If we get below that over here, it's going on down. Probably down to the 30 to 35 area. So this low is super important. If we get below that, coming down here, Otherwise, target would be up here. And the resistance zone is right there. And Starbucks. Books. Oh, what a retrace. Well, hold that roadmap line and break back higher. I still have a bigger upside target right up here, 150. It did a violent retrace to the roadmap line once. Did it twice. I'd like to see the extension right up in that area. I've got all sorts of alerts because I have a chunk of calls that are just at break even. If for some reason we get below, now here's the warning. If we get below that low, it's probably over. And I probably should set an alert there at this point. Get below 86, game over. Probably going down here, 60. FUJHY is probably not a great chart. Yeah, lots of chop. What do you expect it to do? It's been doing that for 5 years. With a low right there and a high right there. I mean, probably just expect it to keep doing that. Stuff isn't magic. I don't expect it to just, you know, when a stock does that pullback and just sits here, it's probably going to keep doing that until we get some kind of major change. And a major change is going to take a breakout above 14 at this point. And I don't see like giant it's just not giant profit, not at 0.46, 0.82, 0.29, 0.22. Yeah, so arguably Super is overvalued for what it does. FA. Advantage. Watch out for that. That looks like a first move down. I retrace. Next move down. That's the IPO. Everything starts out bearish. That it's potential that's the bottom, but this move up was overlapping. That's usually a sign of corrective. In fact, it made a lower high. It's corrective. Probably gonna make a lower low. Fib line here stopped in the vicinity of that prior consolidation. It's not good. All signs point to this going down here. I would bet this goes on down here eventually. It can rally all the way back up to the roadmap line, still bounce off and come back down. That's what I would expect. It's going to have to like do some miracle kind of stuff to save it at this point. It's possible it's a leading diagonal. I mean, there's only a slim chance that this is a leading diagonal. It still didn't retrace deep enough to meet that criteria. I would expect a deeper retrace. and then we come back up, break above the daily roadmap line, back test, and do some bullish stuff. Either way, probably some further downside on FA. Venom, Viper Energy. Some wicked volatility there. And we finally hit the roadmap line. And if we can break back up through that right there, we have potential to go up to 60 target up here. If we glance off of that 618 zone, potential to come down here to get that upside or this potential downside. This would be the tell right there. Now it can always fail at the roadmap line and just make a move on down. Entirely possible too. Oracle, talked about it enough, right? Resistance, 172 to 180. Get above it, 207. And GME. There's the downtrend of highs. I'm probably going lower. My target's still down at 18. And DOW. Hitting the target. Look at that. Those of you that wonder if there's something to this, there you go. Support on down to 29. Looking for this to bounce. If it does bounce, break through the daily roadmap line somewhere around 45. We get a bigger upside. What does bigger upside look like at this point? This wasn't extremely difficult. This made the move down, the retrace, and the next move down to an ideal level. What does that all mean? It means this move down right here, this retrace right here to a 618. Took a long while, but that's only 1, 2, 3. This might do a 4 and a 5 on down before it's completely finished. What we don't want to see overlap right there. So a break back above 49 would indicate this is done, and we're going to go higher from here on Dow. This leaves the upside potential. Click the wrong tool, that. And this right now leaves the upside potential up in this zone right now. On the next move. And that's the next move higher when we get above the 49 area. So we're looking at breaking above that low right there. That low being the important low. We get above it. Kick off this bigger potential. As long as we're below that, it leaves us with further downside potential somewhere in the 30 area. Right there. That's Dow for you. Twilio. I thought I already did Twilio. I talk about so many in the morning and so many in the afternoon. There's the resistance, 126. Has the gap down, 162, 160, or 72. Bigger, 618 resistance at 183. Let's see if we can break through it. NVO. We're below that support. I would be very careful. This could very quickly erode down to 55 area. TRMO. Nope. Reverse split. Dumpster fire, baby. That's a garbage pile of a company. That reverse split right there. Chop, 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 chop. Probably going to be back down lower low eventually. Unless they just announced that they cured cancer and it's practically free, except we make tons of money. cures all the cancer. Probably going lower low. Or if they get bought out. I mean, Netflix probably on the way. 1100. Those are the targets. 1098 to 1129, somewhere in there. The potential to rock and roll even higher. 1618 all the way up at 1700, but I think we'll get some pullbacks along the way. I don't think we're just shooting up there now. Probably do some stuff like this on the way up there. And Celsius, I haven't really looked at this much. Working on breaking through the roadmap line. I bought back here. Yeah, I bought right in here. I've just been sitting on it, waiting. That looked promising. That kind of bummed me out. Haven't really looked at it since. Breaking back new highs. My initial upside target was just right here. But that's on the limited, smaller picture measured bounce. The bigger picture measured bounce target. This move up, this retrace. Bigger picture, we're looking for a move up here in this zone, potentially even up to this zone right there. So from the current prices, we got in. If you got in with me in the 20s, that's 10x potential right there. You may be like, I don't have the patience for holding on to a 10x. Well, if you don't, you're never going to get one. All right, these things are high risk, high reward, 10x, and it takes some time. And some of them fail. Lots of them fail. And Bud failed miserably. Look at that. Broke down. Heartbreaker. Like it never broke out. It chopped. It set up the potential measured bounce on that initial whole like bad marketing campaign. Did a double dip, gave you extra opportunity, popped up here, looked like it was going to break out and go. Rejected. Tried again. Rejected. Tried one more time. Rejected. Failure. Went lower low. So sometimes they not work. Yeah, sometimes they don't work. And another one that recently kind of crushed me a little bit. This one. Beautiful potential. Deep retrace. Doesn't look good anymore. Not very good. Still holding 1,000 shares because it's still positive, but I bought back here. Not looking too hot. One that did work out pretty well. This one right here. Got in right here. Got out right here. Not too shabby. Still has upside potential to go. But after this chopping, as long as it did, from October through March, I was kind of I got short capital resources in March. I needed to liquidate something that was pretty profitable. Boom. Limited upside left on that one. So there you go. Hopefully that was helpful. So Celsius is another one of those plays. MU, another one of those plays, but you got to be able to hold on. PAL, there's the low, here's the resistance, there's the high, 410. And LNTH. It's kind of chopping along sideways. Not really breaking out, not really breaking down. Potential, although it doesn't look very strong, potential that this rallies on up to 133, 142, which is not very much higher. Right up in there. PODD. I'm going to wrap this up. I got another meeting at 7. Got to attend to. There's the high, there's the low. Here's the resistance right there, 300. BMAX. And that doesn't have enough. Bitcoin corporate treasury convertible bond. Yeah, I don't have enough candles to do anything, but it looks like it's rocking and rolling right there. FAS, like I said, potential 198. Already did that one. Already did GES, VSCO. If you missed anything, yeah, there's my reminder for my meeting. That goes off again. I have to go. And sideways. That's 3 waves up. 2-way corrective. Target, deep retrace. Potential for this to extend lower low. Be careful. Very, very real possibility we're going to make a lower low than we made back here in September of 23. And ALD. I don't know if that's done or not. Looks like we still have more downside to potentially go. Doesn't look done. Go, Daddy. There's the resistance, 196. Upside potential, 124. And here's the next level of support if we reject off of that 618. Potential right there. Break above. Move up there. All right. Yeah, did SWBI. There's no prediction. It's just sitting at the lows. It's got to do something. FGLT looks like we're going to extend this down to 13. BA. I mean, the potential is 224, big retrace, and then work on 600 right there. And PLNT. I think I sold the shares. No, I did not sell these shares. Man. What the heck? What was that? Bigger upside potential for Planet Fitness. Right up here. Yeah, short term looking for 130. And then a move up here. PLNT, BMRN. And that looks pretty bad. I would be expecting that to go down and make a lower low, 60. I already did Archer. I'm going to have to wrap this up. Do a few more. UPS going down. ATRO going up, 28 possibly. QCOM sideways in the range. Resistance at 78, support at 150. And hanging out sideways. And ENPH. Maybe we bottom, still downside potential, 50 on the downside. AOSL. And sideways. AMD. We break back above the roadmap line. This is very bullish for going much higher. Target is up here, 400 to 600. At this point, maybe even 800, 900. That's one of those big opportunities like Celsius and others. Let's see, GEHC, GE Healthcare, sideways chop, tightening up. That's kind of a watermelon seed squeeze. I would expect support down around 80 and top out around 94 for the foreseeable future. And FSLR is potentially going to break down and go lower. METU. And it's just meta. And AJG. Potential to extend to 371, but also risk to, on the downside, back to the roadmap line here after that big pop. And ARKK. Got a couple minutes left. Resistance at the roadmap line. If we can get through. This is just Bitcoin's chart. Upside potential. And a ride or die with Bitcoin. There. Well, I mean, this is not Bitcoin's chart, but it is like Bitcoin's chart as far as how this is going to react in the market. This is risk on, risk off. Risk on, it's going higher. Risk off, we're going down. All right, that's what I meant when I said like Bitcoin. It's not ARKB. It's very risk on, risk off. You see the very similar chart pattern there, just more exaggerated. ABBV, and back to the roadmap line would be what I expect. GE, resistance at 220, and then retrace. UNP, sideways chop, continues in this zone between 250 and 220, and DDOG, and potential bounced off the support zone. Roadmap line resistance, bigger upside, 220 above that. And there you go. CLSK, CLSK, downside. Bud, I expect more downside. I don't know where it might bottom. And I gotta go. Have fun. See you later. Bye for now, everybody. We'll see you tomorrow. Same bat time, same bat channel. 9:15 tomorrow morning. We'll look for stuff moving